Italy's economy is currently navigating a period of considerable uncertainty. Growth has noticeably slowed, and projections for the immediate future suggest this subdued trend is likely to persist. The nation's primary business lobby, Confindustria, anticipates only a modest expansion. They forecast a mere 0.6% growth in the gross domestic product for 2025. This figure represents a further deceleration from the 0.7% growth recorded in 2024. It's crucial to note that even the 2024 performance fell short of the government's initial, more optimistic targets of 1%. The economic landscape, therefore, demands careful observation and proactive strategies. The final quarter of 2024 painted a stark picture of this stagnation. Official figures revealed zero growth when compared to the preceding quarter. This marked the second consecutive quarter where the economy essentially stood still. Such a pattern raises concerns about underlying economic momentum. The full-year GDP growth for 2024 was confirmed at 0.5% by some sources, again missing government forecasts. This underperformance highlights the challenging environment Italy faces. It underscores the need for robust policy interventions to stimulate demand and productivity. The state has a vital role in shaping a more dynamic economic trajectory. Economists are generally more cautious than government projections. Many independent analysts predict a full-year growth figure of around 0.7% for 2025. This is significantly lower than the government's ambitious target of 1.2%. Such discrepancies often point to differing assumptions about domestic and international conditions. They also reflect varying confidence levels in the effectiveness of planned policies. Understanding these differences is key to realistic economic planning. A clear-eyed assessment of challenges is the first step towards overcoming them. Public investment can act as a catalyst in such times. The overall economic climate in Italy is thus one of fragility. International uncertainties and domestic structural issues intertwine. They create a complex web of factors impacting growth. The government's new economic outlook, anticipated in late April 2025, is widely expected to reflect these more challenging realities. It will likely present a weaker forecast than previous projections. This situation calls for a mission-oriented approach. The state must define clear economic goals. It should then direct investment and policy towards achieving them, fostering innovation and sustainable development for the long-term benefit of its citizens. Several significant factors are currently acting as headwinds, stifling Italy's economic growth. Persistently high energy prices represent a major burden for both businesses and households. This issue is particularly acute for Italy, given its considerable reliance on imported energy sources. The increased cost of energy directly translates into higher operational expenses for industries. It also erodes the purchasing power of consumers. This dampens domestic demand, which is a crucial component of overall economic activity. Addressing energy costs must be a priority for sustainable economic recovery and future resilience. Beyond energy, the international trade environment presents further challenges. There is an expected increase in US tariffs, which could adversely affect Italian exporters. Geopolitical tensions across the globe also contribute to a climate of uncertainty. These tensions can disrupt supply chains, impact investor confidence, and lead to volatile market conditions. Such instability makes long-term planning difficult for businesses. It can also deter foreign investment, which is vital for economic dynamism. The Italian state needs to actively work to mitigate these external risks. This includes fostering stronger international partnerships and supporting businesses in navigating new trade landscapes. Another critical factor is the challenge in effectively deploying European Union pandemic recovery funds. These funds, known as the Next Generation EU program, offer a substantial opportunity for transformation. However, bureaucratic hurdles and difficulties in project implementation can slow down their absorption. Ensuring these resources are utilized efficiently and strategically is paramount. They should be directed towards projects that enhance long-term productivity, sustainability, and innovation. The state's capacity to manage and direct these funds effectively is a key determinant of their impact on future growth and societal well-being. Italy's significant energy dependence exacerbates these challenges. The nation is reported to be the most energy-dependent country in Europe, with a rate of 73.5%. This high level of dependence makes the Italian economy particularly vulnerable to fluctuations in global energy markets. It also has implications for the country's trade balance and its environmental commitments. Reducing this dependency through diversification of energy sources and investment in renewables is not just an economic necessity, it is also a strategic imperative for national security and long-term sustainability. A proactive industrial strategy is needed to drive this transition. The government led by Premier Giorgia Meloni has introduced a series of policies aimed at navigating these economic challenges. A new economic outlook is anticipated soon, likely reflecting a more cautious stance. The 2025 budget, a significant fiscal package, totals around €30 billion in measures. A key component of this budget involves tax cuts. These are specifically targeted at individuals with incomes up to €40,000 per year. The intention is to boost disposable income for a large segment of the population. This in turn could stimulate consumer spending and support domestic demand, which has shown weakness. Another important fiscal measure is the reduction in corporation tax. This tax will decrease from 24% to 20% for businesses that choose to reinvest their profits. It also applies to companies that hire new employees, particularly focusing on permanent contracts. This policy aims to incentivize business investment and job creation. By encouraging companies to retain earnings for growth and expand their workforce, the government hopes to foster a more dynamic business environment. Such supply-side measures are intended to enhance Italy's productive capacity. The state is thus attempting to steer private sector activity towards national economic goals. On the public finance front, the Meloni government has focused on reducing the public deficit. Official figures show a reduction from 7.2% of GDP in 2023 to 3.8% in 2024. The target for 2025 is to bring this figure down further to 3.3%. While public debt did fall below the €3,000 billion mark temporarily in 2024, it remained substantial at €2,981.3 billion in October 2024. The public debt to GDP ratio stands at a high 137%. Managing this debt sustainably while pursuing growth-oriented policies is a delicate balancing act. It requires careful fiscal management and a clear strategy for long-term economic health. Beyond fiscal measures, the government has also launched initiatives like the Mattei Plan for Africa. This plan seeks to foster cooperation with African states. Its stated aims include combating illegal immigration and promoting development in partner countries. Such initiatives reflect a broader strategy to address complex issues through international collaboration. While the direct economic impact may take time to materialize, these policies are part of the government's wider agenda. They attempt to connect domestic concerns with foreign policy. The effectiveness of these multifaceted approaches will be crucial in shaping Italy's economic and social future. Italy's profound energy dependence remains a persistent vulnerability for its economy. As the most energy-dependent nation in Europe, importing 73.5% of its energy needs, the country is exceptionally exposed to global energy price volatility and geopolitical supply disruptions. This reliance has direct consequences on inflation, industrial competitiveness, and the overall cost of living for Italian citizens. The recent spikes in energy prices have starkly illustrated this vulnerability, impacting businesses' operational costs and squeezing household budgets. Therefore, addressing this dependency is not merely an economic policy choice, but a fundamental strategic imperative for national resilience and autonomy. The Italian government, under Premier Meloni, has recognized this challenge and is pursuing a multi-pronged energy policy. This policy focuses on diversification of energy supplies, moving away from over-reliance on single sources. It also aims at strengthening national energy infrastructure to ensure security and efficiency. Furthermore, there is a significant push towards promoting renewable energy sources. This transition is crucial not only for energy independence but also for meeting climate change targets. The state must act as a key enabler in this transition, fostering investment and innovation in green technologies. To achieve these energy goals, Italy is actively forming and strengthening international partnerships. Collaborations have been established or reinforced with countries like Algeria, Egypt, Azerbaijan, and Qatar. These partnerships aim to secure more diverse gas supplies and explore joint energy projects. A notable recent development is a new €1 billion clean energy infrastructure project. This venture involves collaboration with Albania and the United Arab Emirates. Such international cooperation is vital for sharing technology, investment and risk in the complex global energy landscape. These are concrete steps towards a more secure energy future. Ultimately, tackling energy dependence requires a long-term vision and sustained public and private investment. It involves creating market conditions that favor renewable energy development. It also means investing in energy efficiency across all sectors of the economy. The state can play a mission-oriented role here, setting ambitious targets for green energy production and supporting research into new energy solutions. By transforming this vulnerability into an opportunity for innovation and sustainable development, Italy can enhance its economic stability. It can also position itself as a leader in the global energy transition, creating new industries and jobs. Section 5, Sectoral Shifts, a mixed bag of performance and potential. The Italian economy is witnessing varied performance across its different sectors, presenting a mixed bag of growth and decline. Data from the final quarter of 2024 indicated that the industrial sector showed signs of expansion. This resilience in industry is a positive signal, suggesting that some segments of Italian manufacturing retain their competitiveness. However, this was contrasted by declines in both the services and agriculture sectors during the same period. The services sector, a large component of the Italian economy, facing a downturn, can have significant implications for overall employment and consumer confidence. Agriculture, while smaller, is vital for regional economies and food security. The overall economic picture in late 2024 was further complicated by contrasting demand drivers. There was a positive contribution from foreign trade, with exports outstripping imports. This highlights the continued strength of certain Italian products in global markets. However, this positive external impulse was unfortunately offset by a negative contribution from domestic demand. Weak domestic demand often points to cautious consumer spending and subdued business investment within the country. Revitalizing internal demand is therefore a key challenge for policymakers. The state can play a role through targeted fiscal measures and by fostering an environment conducive to investment. Despite some sectoral weaknesses, Italy possesses significant strengths in several key export-oriented industries. The country is renowned for its luxury goods and fashion sectors, which command global appeal. Precision engineering and pharmaceuticals are also areas where Italian companies demonstrate considerable innovation and export capacity. The agri-food sector, celebrated for its quality and tradition, remains a cornerstone of Italian exports. These sectors, driven by approximately 35,000 exporting companies, are crucial for Italy's trade balance. They are actively expanding into emerging markets, seeking new opportunities for growth and diversification. Looking ahead, the challenge lies in supporting the growth sectors while addressing the issues in those that are declining or stagnating. This requires a nuanced industrial strategy. Such a strategy should foster innovation across the board and improve the competitiveness of all sectors. For instance, supporting the digitalization of services or promoting sustainable practices in agriculture could unlock new potential. The state's role is not to pick winners, but to create the conditions for all sectors to innovate and thrive. This includes investing in skills, infrastructure, and research that benefit the entire economy, ensuring a more balanced and resilient sectoral performance. Section 6. The export engine, a beacon of national strength. Italy's export sector stands out as a significant beacon of strength for its economy. The nation has consistently recorded a higher volume of exports than imports every year since 2012. This sustained trade surplus, particularly in manufactured goods, underscores the global competitiveness of Italian products. In 2024, Italy achieved the remarkable position of becoming the world's fourth largest exporter. This achievement is a testament to the quality, innovation, and brand appeal associated with Made in Italy. The ability to successfully compete in international markets provides a crucial buffer against domestic economic weaknesses. The trade surplus, when excluding volatile energy minerals, is particularly impressive, standing at approximately $100 billion. This figure highlights the strong underlying performance of Italy's manufacturing and value-added sectors. Key trading partnerships also contribute significantly to this success. For example, bilateral trade with neighboring France reached a substantial €127 billion in 2023, indicating deep economic integration with major European partners. These strong trade relationships are vital for continued export growth. They provide stable markets for Italian goods and services, supporting jobs and income at home. The backbone of this export prowess is a dynamic network of around 35,000 exporting companies. These firms operate across a diverse range of sectors. They include world-renowned names in luxury goods and high fashion. They also encompass leaders in precision engineering, pharmaceuticals, and the high-quality agri-food industry. These companies are not only focused on traditional markets, but are also actively pursuing expansion into emerging economies. This strategic diversification helps to mitigate risks and tap into new sources of global demand. The entrepreneurial spirit of these firms is a key national asset. To maintain and enhance this export strength, continuous support and strategic vision are necessary. The state has a role in helping these companies, especially small and medium-sized enterprises, to navigate complex international markets. This includes providing access to trade finance, supporting participation in international fairs, and facilitating market intelligence. Furthermore, investment in innovation and skills is crucial to ensure that Italian products remain at the cutting edge. By nurturing its export engine, Italy can continue to leverage global demand as a key driver of its economic prosperity and create public value through international engagement. Section 7. Cracks in the foundation, addressing deep-seated structural issues. Despite its export strengths, the Italian economy is burdened by several deep-seated structural issues that act as cracks in its foundation. One significant challenge is the high tax pressure. In 2023, the tax burden reached 42.8% of GDP. While necessary for funding public services and managing debt, such high levels can disincentivize work, investment, and entrepreneurship. It can particularly affect the competitiveness of businesses and the disposable income of households. Reforming the tax system to make it fairer, simpler, and more conducive to growth is a complex but essential task for fostering a more dynamic economy. Another critical area of concern is Italy's low investment in research and development. In 2022, R&D expenditure amounted to only 1.4% of GDP. This figure is below the average of many other advanced economies. Insufficient investment in R&D can hinder innovation, limit productivity growth, and reduce long-term competitiveness. To transition towards a knowledge-based economy and tackle grand societal challenges, a significant boost in both public and private R&D spending is required. The state should champion a mission-oriented approach to innovation, directing investment towards strategic areas for future growth. The labour market also presents persistent structural problems. Youth unemployment remains alarmingly high, typically hovering between 20 and 25%. This not only represents a tragic waste of human potential, but also contributes to social inequality and brain drain. While record employment numbers, 23.7 million in 2024, have been achieved, the overall employment rate at 62.3% is still low compared to other European countries. Furthermore, issues of low and, in some cases, declining real wages affect the purchasing power and living standards of many workers. Addressing these labour market deficiencies requires comprehensive reforms. Compounding these issues is the significant emigration of young, highly qualified Italians. This phenomenon, often referred to as a diaspora, leads to a skills deficit within the country. When talented individuals leave to seek better opportunities elsewhere, Italy loses out on their contributions to innovation, entrepreneurship, and economic growth. Creating an environment that retains and attracts talent is crucial. This involves offering competitive salaries, fostering research opportunities, and ensuring a dynamic and meritocratic system. Addressing these interconnected structural problems is fundamental for unlocking Italy's full economic potential and ensuring sustainable prosperity. Section 8. Demographic dilemmas and the workforce, a shrinking future. Italy is facing profound demographic dilemmas that cast a shadow over its long-term economic prospects, potentially signaling a shrinking future. The country's birth rate is among the lowest in Europe, recorded at just 1.24 children per woman in 2023. This persistently low fertility rate contributes to an aging population and an overall demographic decline. A shrinking and aging population has wide-ranging economic consequences. These include a smaller future workforce, increased pressure on pension and healthcare systems, and potentially lower dynamism in consumption and innovation. Reversing these demographic trends is a significant societal challenge. The Meloni government has introduced several family aid policies in an attempt to address the low birth rate. These measures include an increased single universal allowance for children. There are also bonuses for families with 3 or more children. Furthermore, a €1,000 bonus for newborns is planned by 2025 for families with an IC up to €40,000. While these initiatives aim to provide financial support to families, tackling deep-rooted demographic trends often requires a broader set of social and economic changes. These include better work-life balance, affordable childcare, and cultural shifts supporting parenthood. The demographic situation directly impacts the workforce. Italy already relies on a significant number of foreign workers. In 2024, there were 2.4 million foreign workers, constituting 10.1% of the total workforce and contributing an estimated 8.8% to the national GDP. Forecasts indicate a growing need for immigrant workers, with an estimated requirement of 640,000 individuals between 2024 and 2028 to fill labor shortages. This highlights the importance of well-managed immigration policies that can meet labor market needs while ensuring social integration. Interestingly, immigrant arrivals saw a significant reduction of 57.9% from 2023 to 2024, a trend whose long-term implications need careful monitoring. Addressing these demographic and workforce challenges requires a strategic, long-term approach from the state. This involves not only pro-family policies, but also investing in education and skills for the existing population. It means creating an economy that offers attractive opportunities for young people, reducing the incentive for skilled individuals to emigrate. Furthermore, developing effective policies for the integration of immigrant workers is crucial for maximizing their contribution to the economy and society. A proactive state can help shape a future where demographic challenges are managed effectively, ensuring continued social and economic vitality for Italy. Section 9, Forging Ahead, Opportunities for a Resilient and Enterprising Italy. Despite the array of challenges, Italy possesses significant opportunities to forge a more resilient and enterprising economic future. A primary opportunity lies in the more effective utilization of the European Union's next-generation EU recovery funds. These substantial resources, if strategically deployed, can act as a powerful catalyst for modernization and growth. The focus should be on investments that enhance long-term productivity, such as digital transformation, green infrastructure, and education. The state must exhibit strong governance and administrative capacity to ensure these funds translate into tangible improvements and public value across the country. A crucial pathway to enhance competitiveness is through increased investment in innovation and research and development. By moving up the value chain and fostering cutting-edge industries, Italy can create higher quality jobs and boost export performance beyond its traditional strengths. This requires a concerted effort from both the public and private sectors. The government can play a vital role by creating a supportive ecosystem for innovation, funding basic research, and promoting collaboration between universities and industry. A mission-oriented innovation policy targeting key societal challenges can drive technological breakthroughs and economic diversification. Addressing the long-standing structural impediments is another key area of opportunity. Implementing reforms that simplify bureaucracy, improve the efficiency of the justice system, and create a more flexible labor market can significantly boost productivity and attract investment. While politically challenging, these reforms are essential for unlocking Italy's growth potential. A more dynamic business environment will encourage entrepreneurship and make Italy a more attractive place for both domestic and foreign capital. This requires a determined and long-term commitment from policymakers to create a truly enabling state. Finally, Italy can capitalize on its existing export strengths while actively exploring new markets and sectors. The transition to a greener, more sustainable economy also presents immense opportunities for innovation and new business development in areas like renewable energy, sustainable agriculture, and circular economy models. Furthermore, policies aimed at reversing negative demographic trends and retaining skilled talent are fundamental. By embracing a proactive, strategic, and mission-oriented approach, the Italian state can steer the economy towards a path of sustainable growth, leveraging its inherent strengths to overcome current difficulties and build a prosperous future for all its citizens.